How are we doing today? I want to kind of do a different episode today, talking about investments I wouldn't own or I try to avoid. And this is my personal opinion. This is going to be a podcast full of opinion more than fact. There'll be a lot of facts in terms of how things work, but I want to talk about things I just personally avoid and kind of why, because a lot of this stuff is hot. We get, oh, man, it's great. This is great. That's great. And why I worry about it. And a lot of times it's because there's a lot of underlying risk that people don't talk about. And this is not a recommendation of any company. We're not going to talk specific companies today at all. We're going to talk about industries and what relates there. This may not be the best for you, or it might be right for you. This is kind of what I do and kind of give you an insight there. The difficulty is every time you talk about an investment is people always tell you their hero story about investing. Oh, yeah, I bought XYZ and I made this much money. I have a client that he calls me up every once in a while. He's like, yeah, my brother owns this and, XYZ company and he made a lot of money. Well, how much money did he make? Well, it's a lot. Okay, why aren't we in this? There's a myriad of reasons why we're not in that, but how much money did he make? When did he buy it? He knows none of that. It's just his brother's a hero and he does these hero stories. I used to have a friend that he didn't, but like everybody in his family and all of the family, like friends, their entire group were big on going to Vegas. They were all Vegas people. Oh yeah, my dad's going to Vegas for a week. Oh yeah, this cousin Freddie's going to Vegas for a week. This person's going to Vegas for a week. Everybody went to Vegas. Everybody either broke even or came home making money. Every single one of them, every single time. I don't know if you've ever been to Las Vegas or seen pictures. They have these gigantic buildings that are paid for by the people that go in that think they're going to break even or win. And they don't, because the odds are stacked heavily against them. But this guy was convinced, that his family was convinced, that they always make money. It was always either slots or blackjack. And you just stay there long enough, you're going to win. Nope. The longer you stay, the more you're going to lose. So that's kind of one of the things we want to watch out for is that people will always tell you about how great things are, and they may not have any good sense. One of the industries, and we're not going to talk too much about it today, that I have avoided since day one is the marijuana industry. Is back 10, 15 years ago, after Colorado, before my state of Massachusetts, as it started ramping up, people were like really hot for these companies. And this isn't an endorsement of a strategy, but I don't know one person that actually ever made any money at it in terms of buying these stocks. And the difficulty is because it sounds like a good deal. Man, you're like a legalized drug dealer and people have to have this. And you see a lot of people using the product. Here in Massachusetts, there's a substantial amount of marijuana use. And there is a substantial number of marijuana stores. Frightening number of marijuana stores. And I read an article recently that none of these things make any money, that in the states that have legalized it, they've given out so many licenses to these stores that the stores don't make any money, which is part of the reason why these stocks have not done well. But the other difficulty is because it's federally illegal. If I want to open a store in Massachusetts, I can. Every single product has to be made and manufactured and processed in Massachusetts because they can't cross state lines because it's federally illegal. And that goes for every single state. So Colorado, it's 100% Colorado product. In California, it's 100% California. From seed to packaging to sale is 100% in that state. And it just doesn't work out. A lot of people thought they were going to make bajillions and they don't. And that's what we're kind of watching out for. So all that being said, let's kind of kick off the list with gold. And man, gold has been on a tear this year. It's 2025. Gold has gone up a lot this year. And you're seeing a lot of commercials on TV or on the radio or on your phone. Buy gold. Hey, we got gold. And I want to caution you right there. That's usually a first indicator that it's a bad time to buy an investment. If somebody's telling you you shouldn't buy this and it's an advertisement, it means they have some of it and they want you to take it off their hands. Not always a ringing endorsement. They might be right once in a while. They might be right most of the time, but they're not doing it because they're trying to do you a favor. They're doing it because they own it and they don't want to own it anymore. But yeah, we're looking at gold being at like $3,400 an ounce, give or take. Right now, as I record this, might be more or less by the time you hear this. In 1971, when we finally went through gold deregulation under Richard Nixon, it was $35 an ounce. It's grown 100 times since 1971. That's amazing. It's staggering. It means we should invest in this, right? Because that's, hang on, I get the number here. It's an 8.7% rate of return on gold since 1971. Except that you catch the one thing I said. That was when gold was deregulated. During the Great Depression, it was illegal to own gold. I find that one just unbelievable. Is during the Great Depression, you were not allowed to own gold because the government was concerned you were gonna kind of circumvent them and just trade in gold and just ignore dollars. So they made it illegal. You couldn't own gold coins. You couldn't own more than a reasonable amount of jewelry, things like that. They collected all of it. Gave you a fair price at $35 a share, I believe is what the price was. Coincidentally, that's what the price was in 1971. Then when they deregulated, is they pegged the dollar to gold, and they said an ounce of gold is $35. I think in 1940 was the last time they adjusted it, prior to 1971, and it was $35 an ounce for 31 years. So if I go back all the way to 1940 and I say, okay, I bought an ounce of gold in 1940 and I sold it today, what's my rate of return? It works out to about 5.4. Not bad. Actually, not bad. Not as good as the stock market, better than most bonds during that time period of the last 85 years. Not terrible. It's a little bit more than inflation. So we've got something there. Most people will say, or a lot of investors will say, that gold is a holder of inflation. It's actually done a little bit better than that. And there's kind of a reasoning behind that we'll talk about in a second. If I look back till 2000, which was the last time gold was what I consider cheap. Gold was $475 an ounce, $450 an ounce, somewhere around there. Again, 3,400. It's grown a lot in the last 2 decades, 20 to 25 years. It's grown a ton. Well, why is that? If it's grown a lot, is it a good investment? I don't think so. My opinion is I think it's a bad investment. And here's why. Again, I don't want to buy something that's already gone up. If something's run up, that's not the time for me to jump in. It's time for us to jump in when things are not doing well, is when people aren't seeing the value that might actually be there. That's a good time to invest. When everybody realizes what the value is, well, it's either fairly priced or overpriced at that point. The strange thing about gold is that the market for gold involves a lot more people in it than people buying and selling gold. That sounds kind of crazy. Let me kind of give you an example. Is if you were to buy copper or soybeans or go back to Trading Places. Remember Trading Places with Dan Aykroyd and Eddie Murphy? It was frozen concentrated orange juice, which I don't even think trades anymore. Those are commodities that are traded. And if you don't need corn or soybeans or copper or frozen concentrated orange juice, you don't trade in that market because it's for the people that buy and sell that market. I looked at a bunch of sources to try to get this data. Nobody really had this data like consolidated. I had to pull it from a bunch of different places. So bear with me. It doesn't always match up, but from the best guess I can get online, last year, $350 billion of gold was mined. It's a lot of gold. It seems like a lot of gold. It seems like a lot of gold, especially when you read reports that, we're 50 years out from running out of gold, that the mineable amount of gold is finite in the Earth's crust. So there's a point at which we won't mine anymore, which is fascinating. So maybe 50 years from now, it's a good thing to own gold because it will be a fixed, be like Bitcoin. There's only so many shares of it. The market's $22 trillion. The gold bought and sold last year was $22 trillion, or about 66 times the amount of gold that was mined. That's a lot. And it's not only um, that much, but the amount of gold in the world is something like $11 trillion worth of gold exists. So the trading market traded all of the gold in the world twice last year. I don't know about you, but I got my wedding ring on, and it's been on me on my finger for the last 34 years. Um, yeah, I don't. I didn't trade this last year. I didn't sell it or buy it last year. It's still on my finger. There's a lot of speculation that goes on in gold, and that's part of the reason why I believe the price is so high. Is this speculation is causing gold to be overvalued versus what is fair value? You watch shows like Gold Rush. I love Gold Rush. It's just a fun show to watch, just to see these guys running around with big equipment trying to find these little rocks. Um, they make a fortune now because gold prices are so high, and they're so high because there are a lot of speculators. You look at Tony Beats as the old school guy, and he's been there. He's been up in Canada mining for the last like 40 years. And he talks about 25, 30, 35, 40 years ago, mining up there and barely eking out an existence because the price of gold just wasn't significantly higher than the cost to mine it in the first place. And now they're making money hand over fist. A lot of that, I believe, again, is because of speculation. Do I want to be involved in something where speculation has pushed up prices? You get the meme stocks. I won't mention the meme stocks. Go look up meme stocks. It's been a while. There was a movie company. There was a video game company that online investors decided were a big deal, and they pushed them to stupid valuations. And some people got absolutely hammered by it. That's kind of what I see to a lesser extent with gold right now is the potential in the future may not be as high because I think people have pushed the prices maybe higher than they should. So that kind of leads me, I mentioned a couple minutes ago, crypto. The one good thing about gold versus crypto is, again, I've got my wedding ring on my finger. I can actually touch the wedding ring. The deal with crypto is it doesn't exist at all. And I keep scratching my head trying to figure out, why do we want this? And early on, you hear less and less now. Now it's just about, well, it's crypto. You got to buy crypto because it's crypto. It used to be there were two reasons: privacy and staying outside of the system. I'm outside the system, man. The man can't get me, man. Except the government is now going to create their own crypto and stablecoin currency crypto, or at least endorse stablecoin currency and allow it to happen, such that we have an electronic dollar, which I don't think is a great idea for the U.S. I'm a big fan of dollars, like hard currency dollars. Part of the reason back in 2008 that our country did not go with negative interest rates like Japan did, like a lot of Europe did during the financial crisis, was because there is so much currency, actual hard currency in the US economy, that if they went negative, we would do the same thing that FDR was afraid of in the 30s. We'll just work outside of your system. We will use actual real dollars, and we don't need you. We don't need your institutions. We don't need anything. We'll run a whole cash society, and you lose all control. Making it crypto might give the government an ability to kind of control that just a little bit. So that's a further on concern, but there's no longer outside the system. You're in the system. We're becoming more and more systematized, and ease of use doesn't exist at all. If you've ever used crypto to buy or sell something, it's not easy. And which one do you use? So you use Bitcoin or Alluvium or whatever they are. Bitcoin's the one everybody knows. I couldn't name another one off the top of my head. There was Dogecoin, which has just become an arm of the government at this point. There's no real ease of use of getting the money from your wallet into somebody else's wallet through this blockchain that keeps track of everything. It winds up not being there. And then the third thing is people talked about privacy. Oh, it's private. People don't know. Except if you use Bitcoin fairly frequently, that blockchain's public domain. It's public domain. It has to be because there's different ones and they have to sync and things like that. Well, if it's public domain, it means that somebody can track they can ping and figure out, oh, wait, that's that guy. And they have computer programs that can look at your Bitcoin or crypto purchase or transaction history, and they'll pretty much figure out who you are. It's amazing what computers will do. So there's no longer really any privacy. So what's the point of crypto? And the best I can figure is, no, man, somebody's going to pay me more for this tomorrow. And that scares me. That scares me to no end. I recall back in the early 2000s, 2003, 2004, 2005, somewhere in that range, I was talking online, shocking. I was part of an online discussion group, and there was this woman that was on there that she lived in Vegas at the time. If you remember, Vegas back in probably 2001 through 2007 was one of the hottest markets. Vegas, Florida, Phoenix were huge, huge markets. And they had traded houses, and her house was now worth this. When they bought their first house, it was only worth $150,000. Now this house, 6 years later, is worth $600,000 or $450,000 or whatever it was, whatever the number. And I said, just be careful. She was a little bit arrogant, but I'm always trying to be helpful with advice. I said, just be careful. It doesn't go up forever. No, this is the new economy. I buy this now for this, and then somebody's going to pay me 20% next year because why? Well, because, and there's not a good because behind it. And that's the same thing I see with crypto. This poor woman, I don't know what happened. I know her house was worth probably half of what she paid for it by 2009, because that market just absolutely got obliterated, that real estate market. And I hope she's okay. I don't know, as it was 15 years ago. But what do you do if crypto collapses? Now, will it collapse? It's collapsed to some extent several times in the past. It's wild. The market swings very wildly, but it's very hot right now. But at some point, somebody's going to figure out, why am I buying this? It doesn't make anything. It doesn't do anything. It doesn't maintain privacy. It's not easy to use, and it's part of the system. At some point, it has to get to a place of it's kind of like the tulip bulbs in Holland, is, wait a second, why are we buying these things? That's my fear with crypto. That's the reason I would watch out for it, because I don't think it's something that has long-term sustainability. And it might be 5 or 10 or 15 or 20 years before everything falls apart. But until they figure out something to do with this, there's really, in my opinion, not a reason to own it. Third thing, private equity. Man, this one's beginning popular this year. There is talk of private equity mutual funds. There is talk of putting private equity in 401ks. And I just cringe. I cringe. And I worry about the average American consumer that says, we're ruining this country with private equity because they're buying things like the 2-family down the street from me, which isn't happening very often. And they're screwing things up. But I'm going to get involved in it in the 401k because I want to make a lot of money. Please don't do that on either side. Pretty please. Let's start with what private equity is. Private equity is a kind of catch-all category. Is somebody with a lot of money, like a Jeff Bezos type of person, somebody, Elon Musk, will hire a company, private equity firm, to make direct investments in different firms, businesses, land, whatever. Is they're kind of given an open, it's the word I want. Can't think of the name of the word I want, but they're given pretty much carte blanche to do whatever they want within certain parameters with this money. So they're going to buy into a business. They might buy a pizza parlor. They might buy a 2-family house in Taunton, Massachusetts. They might buy Kmart, like the entire company. Depending on how much money, are they pooling assets between investors, or is it just a single investor? This is what private equity does. It's the way rich people take their money and they invest it. They have somebody else invest it for them. They're too busy on their yacht or being in Saint-Tropez to bother thinking about running these businesses. They hire private equity to do this. And it can make a lot of money. It can also lose a lot of money. There isn't a lot of tracking to it. And that's what's scary, is that there's not a lot going on with that. Is private equity is solely focused on making money and not much else. And they've kind of done a disservice in this country. There was the book, gosh, it's got to be 30 something years ago. Barbarians at the Gate, talking about, I think it was the RJ Nabisco debacle. Is back in the 80s, there was a big, there was a lot of conglomerates out there, I'll say it this way. And there was a big push by big money to like go in and destroy these companies and take just the best parts out of it and just lay waste to the rest of it and make a profit. And they were the barbarians at the gate. That's what they were doing. They were going to come in, they were going to massacre everybody, take the gold, and leave. And it disappeared. It stopped happening to some extent because part of the reason that was happening was back in the 70s, these super conglomerates were being created. So I'll give you an example of what a super conglomerate is. Transamerica Insurance owned one of the movie studios. It might have been Paramount. They owned it. Why? You're an insurance company. I don't get it. I forget which. It might have been Chevron Oil. Chevron Oil Company owned another one. You wonder why the movies were so awful in the 70s, because insurance companies and oil companies own the movie studios, and they don't know how to make movies. They know how to drill for oil and sell insurance. So they had these super conglomerates that these robber barons came in and broke up, somewhat to the detriment of a lot of jobs in this country, a lot of ability to use things, and it disappeared. And it disappeared because there was a moral question of, are you really benefiting if you're just going in and slashing and burning and destroying all these lives that were actually okay up until that point? And it stopped happening. It just kind of like vaporized as these people were made pariahs in the financial world. And now we have private equity. And private equity has done an excellent job of running into the ground companies like Red Lobster, TGI Fridays, Joann Fabric, Toys R Us. To some greater extent, some lesser extent, you can argue Kmart, Sears, although they were destined to fall apart. Anyways, Claire's, I'm not sure Claire's. I mean, if you would know Claire's if you have an earring or you have a daughter that has an earring. You know Claire's, that's where they went to get their ears pierced when they were 14 or whatever. That's where my daughters went when they were 13, 14 to get their ears pierced. I can't imagine anybody goes to a mall anymore, so Claire's is kind of in trouble. But private equity is involved in all of that. But what their big thing was with these bigger companies, especially like Red Lobster, I know was a big deal, Joann Fabric, was they went in and they kind of flipped the script. Is they said, okay, we're going to move the real estate to a different firm. And then we're going to make you pay this exorbitant rent. And oh, by the way, we're moving the real estate. We're not moving the debt. You're keeping all the debt. So we're going to take all of the real estate out of the business. And good luck. And these companies go out of business. Now, I'm not a big Red Lobster fan. I don't go often. Never went to Joann Fabric very often. I just think that's a scummy move. These were two companies that were serving a market, and you just wanted to pull the real estate out of them and bankrupt them. And you did. And you put a lot of people out of work, and you made it inconvenient for people to get access to the certain things they wanted, especially at Joann Fabric, to make a profit. And I don't like that. But that's not why I don't like private equity. Mutual fund that owns private equity. A 401k fund that owns private equity. By its very definition, private equity is illiquid. It's illiquid. I can't sell a 2-family in Taunton, Massachusetts today and have it closed today. I can't sell a pizza parlor. I can't sell Joann Fabric or Toys R Us today. It's impossible to do so. These are inherently illiquid investments. If you have a problem where a bunch of people decide they're going to go, and this was a problem with hedge funds a couple of years ago, was a whole bunch of people got involved in hedge funds, which are similar, and then they all wanted out at the same time. It's illiquid. You can't get out. You're stuck there. And they thought there's something wrong here. That's how it works. I would avoid something that you can't sell when you want to sell, that you're restricted. You want to be very careful. All right, last one. AI. This is so hot. AI is like the biggest thing since sliced bread, and it's great. There are a bunch of AI companies out there that are helping people. My oldest daughter uses, I think, ChatGPT, not to endorse ChatGPT or any of the other ones. She tells ChatGPT what groceries she has in the house, and and make me up 7 recipes for the next week. And it does. And I find that to be a colossal waste of my time to do that. I look and I go, I can't come up with 7 recipes. Looking at that, it would take me more time to enter in all of the food I have in my house and major items than to bother thinking about it. She likes it. She's younger. It's cool. It works for her. I'm very happy. But I'm reminded of when I was in college, I worked at a trust company in Boston. And part of my job was to assemble the computers. They had just started adding personal computers, and I'd take them out of the boxes. They were all IBMs, take them out of the boxes, plug everything in back when you used to have to screw the plugs in and things like that, and make sure they all work, run it through testing, and then deliver it out to whomever's desk it was going to. And there was across the hall from the room I did it in the stock room. Across the hall from the stock room was the mailroom, and there were these old retired mail guys that worked the mailroom at this company. That's what happened is they would retire from the U.S. Postal Service, and they come to work for this firm just in the mailroom, just delivering mail throughout the 3 floors they had on this high rise in Boston. And one of the guys is there, and he's like, "What do you use this for?" I said, "This will be in every house in the world at some point." For what? It's just 1986, 87, somewhere around there. I said, "Well, you could keep recipes in them." He's like, "Yeah, I my wife's got a box for recipes. She's got a box with the recipes." "Well, you can have them here." What else? So you could keep track of this. You keep track of that. We hadn't reached the point at which we needed it yet. And I see the same thing with a lot of people saying, "Oh, you could do this with AI and you could do that with AI." And I go, I can do that myself. I'm all set. I am a functioning adult and I can handle taking care of that. I worry that we may hand off more thinking than we want to, but that's not the reason I want to avoid, or I avoid AI right now, or AI companies right now. Social media companies are very heavy into AI, and they're trying to figure out how to monetize it. And I've seen this a couple times in the past. Not all of these AI engines are going to survive. You've got to figure out which one's going to work and which one's not. And you might say, "Oh, it's going to be fill in the blank." Absolutely. Might be, might not be. I remember back 25 years ago when the hottest search engines were Alta Vista. What's an Alta Vista? Or my personal favorite, because it was really good and then they screwed it up. It was a really good search engine in terms of getting you an answer to a question. And they decided to try to monetize it better. That's the key. That was Ask Jeeves, ask.com. I love Ask Jeeves. Jeeves was the best early on. Then they went, "Oh, we've got to make money." So they started prioritizing links that would generate revenue for them over actual answers. And they went away. And Google is now like the big deal. That's the big deal. Will it be the big deal 10 years from now? Don't know. Same thing with AI. Whose AI engine is going to win out? Somebody's is. Man, it's kind of early. And it's going to come down to who can monetize it. Now, you have some companies that do charge. Are they charging enough? I don't know. How are they going to monetize it? I don't know. And here's my one thing with investing. Just because it looks like it can make a lot of money, if I don't understand something, I don't invest in it. And that's the real reason. Is it's not anything bad about AI or all the problems I have with trying to come up with, having it write something, which it's a horrific writer. Having it develop create a picture, which it's a horrific creator of pictures. There's nothing to do with that. It has to do with I can't see how they're going to figure out how they're going to monetize this, and because of that, I personally just stay away. Your mileage may vary. I'm not sure. So that's what I have. Those are my 4 areas that at the very least I'm cautious. At most I'm staying away for quite a while from those. That may change in the future, but right now, that's what's going on. Hope that kind of helped you, kind of give you a perspective of dealing with these issues. I'm going to give you one of those little life lessons today. And this is just a complete afterthought. I was talking with somebody online this morning, and his grandfather passed away, and his cousin went in and took most of the stuff out. And then his aunts convinced his grandmother to sell all the tools, these antique tools. And he just feels awful that he should have had those, and he was going to hold all this stuff. And it meant something to him. It was very important, but it was also valuable. And he was trying to deal with that. And I said, you need to hear this. Would you trade? Oh, and by the way, the aunts and the cousins never interacted with the grandfather. They just showed up after grandpa died looking for their pound of flesh. I said, would you trade the lifetime you had with your grandfather and relationship for all those tools and stuff, like for free? You could have them tomorrow for free, but you had to forget every single moment you had with your grandfather. Would you make that trade? Of course you wouldn't. Of course you wouldn't. You win. You won. I said, you won. You got the relationship. They got a moment of some cash that they don't remember what they spent the money on, but you got all of those memories, and nobody can take those away from you. So I will caution you that with your investments. Sometimes you're going to hear somebody talk about, I made $1 bajillion. When did you buy it? Why did you buy it? What's going on? What are you doing in the future? None of those questions that we talked about first out are even being addressed. But all you see is those dollar signs. Don't let those dollar signs take you off your game. They're not worth it. They're the lie. Don't chase that lie. Do your research. Know what you're doing. And even if that guy makes $1 billion, does not affect your life one iota. So that's what I have for you today. Thanks for listening. If you get a chance, jump down, give us a rating. Give us a great rating, please. Put a review in. Make sure you share the podcast with people you think will benefit from it. And I will see you next time. Stay safe out there.
Thank you for listening to our podcast. Remember, the views expressed are not necessarily those of Successful Money Strategies. All content is for educational purposes only and should not be construed as an endorsement of any third party or their views, or as a solicitation or offer to sell securities or provide investment, tax, legal, or consulting services. We believe the information presented to be reliable, but it is not guaranteed for accuracy or completeness. Investing involves risk, including the potential loss of principal. Hypothetical returns do not reflect actual trading and may not be indicative of the performance of any specific investment. Always consult with a qualified financial advisor before making any investment decisions. Past performance is not a guarantee of future results. Additional information, including management fees and expenses, is provided on our Form ADV Part 2, available upon request, or at the SEC's Investment Advisor Public Disclosure website, https://advisorinfo.sec.gov.